time for another stock review. We're now going to talk about Wrap Technologies. During this review, you are going to see the most honest review because I'm not paid by anyone, sponsored by anyone to make these reviews. I do it as perks for my members. This particular one, however, full disclosure, somebody wanted it, one of my members wanted it done straight away, so he gave me a $50 super chat, and 20 of that is actually for my wife's birthday, just so you know. But other than that, I'm not actually paid to do these reviews. They just get bumped up the list for those that want to. In this review, we're going to show you the balance sheet. We're going to show you the inside trading, who's buying, who's selling. I'm going to give you a profitability score. I'm going to give you a solvency score. We're going to have a full back test on the S&P 500. So we're going to compare it. If you did buy this company, how does it compare? And you should always do that. How does it compare if I put my money elsewhere? What about the website? What is the product? What does it do? This is it. Also, we're going to invite the CEO to respond to this. Now, I expect, knowing my channel for what it is, within a week, this will rank number one. I will rank number one for the search term, WRAP Technologies, because I rank now for the word stock, which is why my channel is growing so quickly. So when I talk about a small cap company like this, within days, I will rank number one for it. Now, if that's good, if the review is good. I don't own the stock, full disclosure. I'm not here to pump and dump the stock. What I am here to do is to provide the best information for my viewers, my members, to give them an informed decision whether they should buy a stock, sell it, hold it, or whatever, or run clear. So I'm not here to help Wrap Technologies. I'm here to provide an informed review. If it's great, it's great. If it ain't, it ain't. It is what it is. And we shall see what happens over the coming days. All right. So let's get straight into it. We are going to start simple, and then we are going to get much more in detail as the review goes. Okay. So if you are enjoying the video so far, tap the like button if you like it, or if you see anyone do a super chat, it's being made live in a live video. So you might actually get live comments and understand why that is. This is always being made during a live video, so you know my videos are unedited. They are exactly as they are. The only thing I do is add a little bit of compression so it sounds more like a radio. Other than that, there's no editing done. It's exactly how it comes out. Okay, subscribe as well, ring the bell. You'll be notified then of my content, all right? We aim to be the most honest, real channel on YouTube TV. That's the purpose of this. Okay, so Wrap Technologies, what is it? Well, if we look at the line chart, just over the basic line chart at the moment, you will straight away see that it's down over it's down since 2016. It's down overall, and it's very volatile. So it's subject to news. This is a very volatile stock. It is a penny stock. Anything under $5, thank you, Ethan, for your subscription. Anything under $5 is regarded as a penny stock. Now, we are green in the studio today because the stock is up at the moment. So remember this number, $3.80. That's when we started talking about the stock. Okay, let's see what it does within about 24 hours, 48 hours once my review comes out. Okay, what is it though? Wrap Technologies is a global public safety. Global. That's important. So some news I'm about to show you in a moment will demonstrate how global in fact it is. Safety technology and service company which engages in the provision of modern policing solutions to law enforcement and security personnel. It introduces its products include a BolaWrap, remote restraint device, and Wrap Reality. The company was founded by Elwood G and Norris, Scot Cohen, and James Barnes. I invite those guys to be on my show. You can phone into the show. You can have your say, correct me if I'm wrong, or discuss on any of the points on my review. Okay, it's headquartered in Arizona. Listed name is WRAP, W-R-A-P, WRAP Technologies. Founded in 2016, Arizona. Employees 69. Very small company. Scot J. Cohen, I invite you onto my show to do a review and to have a conversation with me. Now then, if you were buying this with margin, it's 75% maintenance. What does that mean? If you're buying it using the brokerage's money, it's regarded as relatively high risk. 25% is the lowest, 100% is the highest. So it's regarded, no surprise, volatile, up and down. It's losing money. It's a company at the moment that's regarded as high risk. Makes sense. Now, it's a very small company. It's 174 million. I hope to be a millionaire within 12 years on this just on this portfolio here. So it's a very small company. However, it's not a rocket company. Doesn't need $1 billion. It can probably grow much. It probably grow with a lot less money with the products that it does. Anyway, we'll come on to that in more detail. The high today is 394. The 52-week high is 411. Price to earnings ratio. What that means is the price you are paying for the stock in ratio to the earnings. It loses money. Now you might go, well, that's no good. I don't want to buy a company that doesn't make money. Of course, new companies very often don't make money. I worked for 1.5 years on this channel making no money because I was investing in myself. Now I make money. So it's a young company, but it's currently not making any money. But even though it's not making money, we need to compare the price earnings ratio to others in the same sector. And there are companies in the same sector. We'll come to those in a minute. You can compare those balance sheets, look at those numbers and see how they compare and go, okay, which is the best value if you like this sector? All right, low today is 362, 52-week low, 95 cents. No dividend, it's purely a growth stock. Okay, makes sense. Moving on down. Now then, the earnings. Our earnings is kind of steadily moving in the right direction towards positive cash flow. We want to be above this number. Right now, we're losing money and we beat expectations. Then we met expectations and we missed. We beat. I'm not sure what we did there. And now we're up on Q3 23. So overall, we are trending up. We've had a little bit of a dip here. We can check the investor pages to find out what happened here. Maybe they made some investments. Maybe they lost some money. We don't know. We can look at that and then we can see where it's likely to go in the future. Now then, who are we in bed with? What I mean by that is this tells us the direction of the stock, or potentially, because it tells us who else is buying this stock in this brokerage that I am using right now. Well, if I don't know, I'll tell you I don't know. Assertio, no idea who they are, never reviewed them. Mink Therapeutics, never reviewed them. Agenus, never reviewed HDO, Catalyst Pharmaceuticals, and Opco Health. Never reviewed any of these companies, so I can't honestly say the direction of the stock based upon the company it keeps. What I can though see is we do have health pharmaceuticals and therapeutics in this list, which means these potentially can be good companies if they have a breakthrough research, whatever. If they find the cure for cancer or whatever. But what you've got here is high risk stocks. But what I'm very pleased to see, so this is positive, even though this is a small company and it's regarded as a penny stock, it doesn't have any that I know of anyway. It doesn't have any scam stocks. This is good. We don't want to see Mullen in here. We don't want to see rubbish company. We don't want to see things like Safety Shot. We don't want to see Nikola. We don't want to see Lucid, right? And we're not seeing anything like that. We don't want to see companies that are surrounded by false information, false pumping and dumping. We don't want to see any of that. And from what I can see, it doesn't keep company with that, which is good. That's a good sign, right? Now, there's very little information on here. Morningstar haven't done a review, so it's very low cap, very under publicized, which will mean because of the size of my channel, this will actually rank number 1 within a few days. And if this review is good, then the price will go up because interest alone will be generated around the company. Let's now have a look more in detail at the company's website. We've got some latest news and we've got some introduction. Right, here we go. As you can see here, it provides the police force, security forces with less lethal weaponry. So rather than tasers, well, I mean tasers is not lethal, but carrying guns, they're bringing out this sort of equipment. All right, so you can see this sort of equipment they've got here. Let's have a little zoom down and have a little look at what we might see here. In the news, website looks okay. Okay, just a bit of information here. Our solutions. We are leading the industry and empowering public safety with innovative training and tools to take individuals safely into custody. Wrap Technologies is a leading global provider of advanced public safety solutions integrating state-of-the-art technology, cutting-edge tools, and comprehensive services to address the complex modern-day challenges facing public safety organizations around the world. It's a global company. Good. Guided by a none-harm principle, Wrap is dedicated to developing a groundbreaking solutions that empower public safety agencies to safeguard the communities they serve in a manner that fosters stronger relationships and delivers positive public safety outcomes. Okay, we understand now a bit about the company. We can go into different bits of their equipment, testimonials. We won't do that on this review. You can do this yourself. We're going to focus on the business. Doesn't matter to me how good the idea is. I'm an investor. Will my investment return a profit of at least 20-30%? Otherwise, why am I giving up my hard-earned cash for it? Okay, that's what we're looking at. Right, in the news, what's the latest thing around the company? Then we'll get into the business end of it, the numbers. I said to you it was a global brand. It is. BolaWrap successfully deployed on aggressive homeless immigrant in Bolzano, Italy. All right, Bolzano Police Department in Italy successfully used the BolaWrap solution while conducting clearances operations at the Roma Bridge. Okay, let's have a quick read here. Let me try and fit this on the screen for you. It's a bit small, I know, but I'll read it out for you. On January the 25th, a couple of days ago, the Bolzano Police Department in Italy successfully used the BolaWrap solution while conducting clearance operations beneath the A22 viaduct at the Roma Bridge. As the police ordered individuals in the fenced-off area along the Isaac River to remove tents and belongings, one occupant, a homeless immigrant, became increasingly aggressive towards the officers. Whilst most people dispersed, the individual grabbed a rock from the ground, turning away from the officers. At that moment, a BolaWrap instructor from the local police equipped with BolaWrap successfully detained the individual who was subsequently arrested. Okay. The intervention was successfully executed without any reported injuries, aligning with good outline but by the counsellor for social policies and so on and so forth, using these products. So we can see the benefits of the product. Okay, that's great. We now know what the product does, but now can the product make us, the investor, money? So let's go into it. So far, if you like this, tap the like button. If you are working at Wrap, please do reach out to me. I would love to interview you. I have a Meet the CEO series where you can be live on the show or do an interview with me and we can record it, and I'd love your thoughts on it. Okay, subscribe and ring the bell if you are new. Let's go now into the numbers and then we'll do a back test on it. All right? Okay, so let's go over now to that part of the review. Okay, so let's look at the numbers. So here we go. Balance sheet and all. Now, straight away, we will look at the intrinsic value. Intrinsic value, 51 cents. So overvaluation. Overvaluation. Now, in other words, it's too expensive, but hang on. This is fair, this is open, this is honest. My reviews are honest. They're not here to help the company. They're here to help the investor. All right, but they're always fair, based upon numbers, not opinions and stuff like that from paid analysts. Okay, it says here that is overvalued by 86% on a base case, 84% on a best case, and 87% on a worst case. In other words, it's too expensive. Hang on though. We do have a warning. Wrap's intrinsic value estimate is unreliable because it is based only on multiples and doesn't have DCF valuation. Now, that's not because the company's bad or whatever. It's because we don't have those valuations yet. There are things missing. It's a new company. It's not making any profits yet. So we can't ascertain the full value until we have all that information. And that could be the case when a company start up. It can be a case when they don't have any profits yet. So that doesn't mean to say it is overvalued, but it's based upon the information that we have today. All right. So, okay, just worth noting. So valuation history, we have a lot of information missing. Now, it's never wise to invest on something without all the information on the table, but you're not going to get all the information on the table for a new company because as of yet, it's not making any money. It's new, whatever it might be. So far, we have limited information. Doesn't mean to say it's good to buy it or it's good not, or we shouldn't buy it. We don't know yet. So now we look at the fundamentals. We look at the balance sheet. We first of all look at the revenue. Well, the revenue has been steadily moving up, which is what we want to see. A new business, we want to see it moving up. 2020, 2 million, 2.8 million, 3.9 million, 4.8 million. As you can see, it's been steadily moving up. Then it went sideways. Now, if that accompanies capital expenditure, we can live with that. If that was because no one liked the product, then we don't like it. So during this range here of flattened out revenue, did we have capital expenditure? Yes, we did. We started to spend on the business. So we can forgive that as being, this is a period of time of investing. But we're now moving up. On the most recent range, we're up 27%, 9.1. In September 29th, great. The next estimate will be December the 30th. We are waiting for their earnings. When they report, let me see when they're going to report. When are we expected? February 28th. Few weeks from now, and if this is popular, I'll cover the earnings. If my members want it, I'll cover the earnings. We're going to get an earnings and find out if this number actually came about. Did we beat on earnings? There it is there. We're expected on February 28th. That's when we're expecting to have the earnings. Okay, you can see on the last range we beat we went up a lot, but we want to see if we're going to do well on earnings. Now it says expected on the 28th. It's too far out to be sure about the date of the earnings. But if we want to cover, if my members want it, I'll cover it. Okay. So if we beat on earnings, this could be good for the stock, continually going up, all right? Operating income. On the most recent range, we're up 7%. Still losing money, but moving up in the right direction. We like that. Net income, same thing, going down, but now we're moving up, +7 on the most recent range. Okay, so we're spending money, we're investing, new company, but we are improving. So far, financials are showing some improvement. Operating cash flow on the most recent range is down 80%. We've spent a lot of money recently. So we want to check what they've spent the money on. Capital expenditure, we can see, has been increased. So they're spending it on capital expenditures. What is capital expenditure? Capital expenditure is building out the business. Capital expenditure is building out the business, not just spending it on wages, but capital expenditure is when you're investing in the business. That's okay. We can do that. Now then, let's look at the balance sheet. Balance sheets don't lie. Balance sheets tell you if it's a good business or not, or at least it has the potential of being a good business. Balance sheet breakdown. We got 31 million of assets. Okay. 14 million is cash. Very, very nice. Not just assets as in equipment we've already bought, but we've actually got 14 million in cash. It's cash positive business. Let's now see what the liabilities are. We don't want more liabilities than assets. We don't. It's less than half, which is good. And 11.1 million. Let's see how much of that is in debt. Because remember, we've got 15 million, 14.9 in cash. So long-term debt, we have no long-term debt. We have no long-term debt or short-term debt, and we have 14.9 million in assets, in cash. Now I can see why the stock price is up. Even though it's potentially overvalued on paper, it's got plenty of cash, no debt, not going anywhere. This will have, in a few moments when I share with you, a good solvency score. I haven't seen it yet. I'm looking at what you're looking at. When I scroll down, I would expect to see a decent solvency. And I think we will, which means the business isn't going bust, which means we can safely invest in it. Okay, so we've got no long-term debt, no short-term debt, looking good. Balance sheet is good. Efficiency of the company. 54% margin. Now, we don't know if that margin is good or not. Sounds great, but we want to compare it to the competition. And in a minute, I will give you the link for the competition, and you can decide whether it's good. Its balance sheet is good. It's got higher margins or lower margins than the competition. That gives us our moat. The margin is regarded as the moat. In other words, if we've got all this profit in our product, we can we can sell less and protect ourselves. We don't have to reduce prices. We've got a good moat, a good margin of error, if you like. So the business has a good margin. But again, I don't know if it is a good margin because every business has a different margin. Auto companies have much smaller margins. They don't make much money on selling cars. They make money on servicing cars. So we have to look at that. Operating margin is improving, most recent range. Net margin is improving on the most recent range. You can see it there. It's improving. Things are getting better. There you go. I was right. Profitability score is 27, which is all ticks here. Not huge amounts of profitability. We're not bright green, because the company is spending money and they're investing. So our profit isn't massive, but our margins are okay. Because if we look at here, exceptional growth, positive growth profit, ROIC is increasing, and exceptional 1-year growth. This is very, very good. Very, very good. We don't make a lot of money right now, but we are making money, and we will make more as time goes by when the capital expenditure comes down. What's important though is the solvency. Nobody wants to invest on a business that is going to go bankrupt. Like I said, it'd be pretty good. It is pretty good. It's not bright green. It's not Amazon. It's not Apple. It's not a bright green 80, 90%, but it's 54%. So for a new company, this is good. Low DE, long-term solvency, short-term solvency. The only thing that's down is low Altman score. Otherwise would be probably 60%. This is good. So far, it's a buy from me. It's a buy from me because we've got plenty of cash. We've got no debt, no long-term, no short-term. It's a product I think people are going to want. It's got good margins. We think we need to compare it. It's showing the valuation is expensive, but I can see now why it's done that. I think we've explained that. So it's a buy from me at this stage. Okay, Wall Street. Again, because of the lack of information, we can't give it any numbers. Now, that can be in our favor. We don't like investing without information. That's a bad place to be. However, it does also mean no one's looking at it, no one's paying attention. It could be a massive potential going forward. There is no information. We only have downside because we think it's overvalued. But from looking at it, the potential is there. The growth rate is potentially there. So there's potential here. That's all I can say at this stage. Now, the competition. We spoke about the competition. You can see here, there's Zebra Technologies, Trimble, and there are others. We can scroll through this list here. All right. You can see Keysight, Technologies, Teledyne, Trimble, Zebra, National, Coherent, Cognex, Navanta, Vontier. These are regarded as the competition for the stock. And I can give you the link to all of these and you can go and compare and you can see, how the competition stacks up. Now, ownership. Who's buying on the inside? Are directors selling it or are they buying it? Good news. People on the inside are buying it. During the last 12 months, Wrap Technologies insiders bought $59,000 worth of stock. Not a lot, but looking at the market cap is reasonable. If that was Apple, they could be doing that in a blink of an eye. It doesn't mean anything. For this company, it shows some positivity. It looks like they've not sold any. Cohen, Scott bought 4,000. No one has sold anything. Just buying. That's very good. That's very good. And also what we don't want to see buying like yesterday. We want to be buying it before insiders buy more. We saw insiders buy it some months ago, then it's been quiet without anything going on, which is good because what comes next? More buying? Well, if it's positive, it does. We don't know. But what we don't want is someone just bought it yesterday because now we've kind of missed the boat, if you like. I mean, it's still good, obviously, but we prefer to buy it before anybody else. So that's positive. This is positive as well. Okay. Now then, there's no news. No one's talking about it. No one's covering it. There's no sentiment, which means by me doing it, it will rank number one, and I'm giving it a fairly good buy. A fairly good buy. Not the best deal in the world, not that amazing because there are some metrics missing, but looks potentially as a good opportunity, potentially. So the balance sheet looks good. And as always, that happens when I talk about this on a small stock. Look at the stock go up. It just shot up 5% after hours. This happens on a very small company, particularly when I'm positive on it. So don't be surprised if this goes up over the next few days. That's very, very good. That literally just happened. 5% in the last few moments. Remember, it's a very small cap. It's only got a market cap of 167 million. It doesn't take much to move a company like this if the sentiment is pretty good. So we played a part there. Again, I'm not buying the stock. I'm not promoting the stock, even though my message is positive, and I will rank number one, and this review will rank number one, and it's generally positive. Don't be surprised if the stock goes up, and there it is. It's gone up 5% in after hours. Okay. Short interest. How did I miss it? How did I miss that? It went up. Yeah. No surprise, really. Yeah. Anyway, 13.21%. 13.21%. We do have a lot of short interest. Not enough for excessive short squeeze. You need high volume. And what do we mean by high volume? Well, if we look at the average volume, oh, hang on. The average volume of this stock is 788,000. The volume today is half of that. So no, we don't have enough volume for a short squeeze. And we need 20% at least for that to happen as well. So we're not in short territory, but what we are in is the stock being driven down. So we have negative pressure on the stock, nothing actually to blow it up though. All right, that might come in time, but it isn't there yet. So there is nothing else to share as far as a review is concerned. The only thing left to do now is give my final thoughts and a back test. Here is the back test. If you're going to invest, you've always got to compare to the S&P. People often say to me, why would you do that on a small company like this? Because I'm an investor. And if I'm going to put some money in, I want to know what happens if I invested in something else. Well, if we look at this, if we put $10,000 in the S&P, since 2019, we've doubled our money. We're at 20,000. We double our money every 7 years on average in the S&P. Wrap Technologies, 10 grand will be worth about 10 grand. In fact, 9,849, 841. It's gone sideways. As you can see, very much more volatile. In 2020, very interesting. We went up with COVID. So it has the element of going up during external macro conditions, maybe during a war, maybe due to unrest. Makes perfect sense when you think about the product, right? That kind of makes sense. It went up during COVID, it popped up, very volatile, and so on and so forth. Let me give you my final thoughts on this stock. So, Wrap Technologies, at the moment, those that are looking at it on a basic plan will assume that it's too expensive. It's overbought. That is an opportunity for those of you that want to buy it. Let me explain what I mean. If you've got intrinsic value, a lot of gamblers, a lot of uninformed investors who don't look at details will only look at that. We've done a poll, 85% of you don't even read balance sheets. And I would be surprised, and I wouldn't be surprised that most people just invest on looking at intrinsic values by reviews from the Motley Fool or Jim Cramer or stuff like that. Very basic stuff. And they'll go, no, too expensive, I ain't buying it. Now, it might be too expensive. However, until you do a deep dive like I've just done, you won't actually realize, actually, the balance sheet shows they have plenty of cash, no long-term debt, no short-term debt. And as I predicted, because it's a low float company, very small, with my review, it's already popped up 5% in the making of this video, let alone what it will do tomorrow. So, is it a buy from me? Well, I'm not going to pump it. I'm not going to say you should buy it. I'm not buying it only because I stay out of all stocks. I only own the S&P because I want to be known as a guy who's not pumping and dumping stock. No one's paid me from the company to promote it. No one's paid me to promote this in any way whatsoever. However, on basic level, it looks expensive. It looks too expensive. But if you read the balance sheet, this does look like a potential buy from me. I'm not going to give it a massive buy, but I'm not going to say it's rubbish either. I think there's a potential here. I think the product is needed. I think the company are well balanced. They seem to have a good balance sheet with good risk management. They don't have any long-term debt. They have potentially a great earnings coming up, which in end of February will cover. And I think you could find that this, if it beats earnings, then and we start becoming cash positive, we might fill in the gaps here and find that we have a gem. So it's a potential buy from me, potential opportunity. My suggestion is, and this is not financial advice, if you like this sector, you think it's worth a buy, tell yourself, how much money do you want to invest? Let's say you have $1,000. You buy $500 worth today, wait for a pullback after this news fades out. My video will come out tomorrow. Give it 24 hours, it will then drop, it will rise and then sell off, because I will be suggesting anyone take profit. If we can get a 20% profit like we had with Momentous and like we had with Plug, I will be suggesting take profit. It will then fall back. So Then you can buy on the way down, and now you can take your seed money out, and now it's all free money. You've got free money just sitting there going up or down or sideways. That's how I would play it, but that's not a suggestion because I'm not in the stock. I'm just giving you the information. What you do is up to you. If you like my review, please do tap the like button and subscribe to my channel. If you want to access Alpha Spread, which is what I use, it's the most advanced algorithmic software, click above my head down here. If you get it and you use the free plan, I don't get any benefit from that whatsoever, but you can review stocks like I do. If you decide to get the premium plan and want to review all the stocks like I do, I get a small commission when you do that. But Alpha Spread do not pay me to make the reviews. They do not pay me to do this. And you can have a free plan where I get absolutely nothing from that either. Click above my head for those links down in the description. Over here, you'll see all the reviews for Alpha Spread that I do. I've done over nearly 70 reviews now. I will review stocks for free for my members. It's one of the perks that you get as a member. But that's it. There's my review for Radiant Smile. I hope you're smiling. I hope you liked it. I wish you the very best. The stock is rallying. I look forward to being number one on the stock within a couple of days, maybe even by tomorrow. There you go. Over here, down here, down here. Until next time, as always, take care of yourselves and each other.